Welcome, I'm John Caldera, president of the Independence Institute and your devil's advocate. Later we're going to talk to the new chair of the Republican Party here in Colorado. But first, do you realize you're in a lot more debt than you thought? Imagine waking up one day and finding that your credit card bill is double, but you didn't buy anything more, you thought. Sheila Weinberg from Truth in Accounting is here. Love your organization. You actually know how to do math.
Yes.
That's what your group does.
Yes.
Tell me a bit more about it.
Well, the politicians know how to do math. They just don't count the same way we do. So Truth in Accounting, we go through the financial statements, audited financial statements of the governments. We dig through all their actuarial reports to try to come up with a 1 or 2 pager that tells the public the truth behind the government's finances.
If I were to oversimplify this, in a business that needs to have an audit, they get a CPA, they come in and audit it. They actually take a look at all the assets, and then they take a look at all the money that's owed, all the expenses, and all the debt they have. And it's very particular that if there's a debt package and that it has to be accounted for, and you get a pretty good picture. Isn't it the same way with the government, that the government works the same way, that some outside CPA comes in and does this to say, here's your asset, but here's all the debt and future obligations you have?
Well, unfortunately, the way the accounting standards for government are different than the accounting standards for the corporations. So yes, they look at the liabilities, but the accountants mandate that the state and local governments keep their unfunded pension liabilities off their balance sheets.
All right, this sounds like a nice quiet little thing. So let me put a magnifying glass on this. They take one of the most massive debt we have, and they're ordered not to put it on governmental balance sheets.
Yes.
So you look at a state or a school board or school district or a city or a county, and a massive amount of funding they have for pensions for their retired workers isn't on the books. No. Am I understanding this the right way?
Yes, you're correct. Like in Colorado, if you look at their balance sheet, they show $196 million of pension liability.
$196 million.
Yeah.
That's a liability.
Yes.
It's not funded.
Yes, but the real number is $11 billion.
Hang on a second. The real number for the pensions is $11 billion, not $200 million.
Yes.
And how do you know this, Miss CPA? You are a CPA, are you not?
Yes. Right? Yeah, we dug through the Paris actuarial report and found how much they're reporting, and then we allocated the state share to them, and came up with 11 billion for the state's share of those liabilities.
All right.
But that doesn't get onto the state's financial statements. They only have to report 2% of that.
How is that possible?
Well,
because
I'll tell you. Just recently, there's accounting standards boards. There's one for the corporations. The governments, for some reason, can't follow those same rules. So they, in essence, created their own board.
So when it comes to you accountants, when it comes to a private company or firm, there's guidelines that you have to adhere to. And those guidelines include showing all the pension liability.
Yes.
Those guidelines do not apply to the government.
No.
So if the exact same pension liability just
doesn't have to be reported. Well, it exists, but it's not on the books. And one of the reasons, a good example is the name of this board that sets these standards is the Governmental Accounting Standards Board. And they just had somebody newly appointed on the board. The board is supposed to be an independent board, so they don't have any vested interest in how the numbers come out. Their new member is the financial officer of the city of Aurora, Illinois. Now, John, do you think that he would have a vested interest on how the numbers are reported?
Because if he reports them properly, his own city is in crisis.
Right. And so there's numerous government officials on that board. There's pension people on the board. There's retirees on the board. And so they, in the past, have not made these governments change this, report these liabilities. Good news, though.
Oh, please.
Well, not good news that the number is going to get less, but it'll be more transparent. We did finally convince the board to require governments next year to report their net pension liability on the face of their balance sheet.
Which means it's going to hit next year that ordinary citizens will be able to see what they see in private corporations when they put out their prospectus and they see the pension liabilities. Next year, hopefully,
yes,
these pension liabilities have to become transparent.
Right, and it's the state has to do it, but also keep in mind the city and school districts have to do it. So our study here in Colorado found that the school districts, they have their own share of the para liability. And the school districts, it hasn't been on their balance sheet. They've been paying the contributions, but they haven't been worried about this credit card amount going up and up and up. And they don't even know what the balance is. Para hasn't even, we did our best, work to calculate it. Para hasn't even ever told them, here is your share of the liability. So it would be like, again, you and your wife have a credit card, but you don't know how much it is. And so us accountants have this saying of like, hey, if you don't measure it, you can't manage it. And that's what's happened.
The Colorado is different than eastern states. Eastern states have large state governments, and as you go west, the state governments are smaller impact in size, but the local governments multiply. And that's why we have 3,400 governments in Colorado: cities, counties, park and rec districts, school districts, library districts, water districts. And a lot of them, not all of them, but a lot of them have pensions that are wrapped up either in para or sometimes different pension funds, but mostly para.
Mostly para. Some of them have their own pension funds.
And for those who don't know, para stands for the Public Employees Retirement Association.
Yeah.
And so that's the retirement pension for government employees. It's underfunded now the way they're counting it, but if you count it the right way, your report comes out and says you're not 200 million in debt, you're 11 billion with a B in debt.
Right.
This is a crisis. Am I missing something? But this is a crisis.
It's a crisis that people haven't known about, and I think the crisis has been able to develop because they have been hiding these numbers. So they've been, when they budget, and Colorado has to balance its budget, it requires local governments to balance their budget, but they have not been including these growing pension costs on their budgets. So you have to look at an employee. They earn a salary, but they also earn benefits. Okay, and one of the benefits they earn is the right to receive a pension. And the pension, even though it has to be paid in the future, it's a current cost, because if you weren't paying them that, you would have to increase their salary. But the governments, to balance their budget, have said, oh, well, it has to be paid in the future. We're not going to include that part of the compensation in the current budget because we don't have to write the check until the future.
And not to get too nerdy about
yes,
this, but
please.
that's the difference between a pension and a 401k. And a 401k or some other defined contribution, we pay the employee right there, they see it, it's in their account, and it's there. A pension, you say, we're paying you, and here's what we're going to give you in the future. So it is payment, but we don't see it right away.
Two differences is the defined benefit plans, which is what what the governments have instead of a defined contribution plan. It would be the same, and you would have your same account if the governments funded them.
Right.
They would be the same. But they've chosen, okay, I'm a politician. Okay, I have to balance my budget. All right.
I need to get elected.
I have to get elected.
And your retirement is years from now.
Right.
Election is next month.
And if I fund this pension, it's not a sexy thing that, I could fund education, I could fund
I could build roads, I could build libraries, I can
or I could fund the pensions.
Right. That nobody's going to see.
Yeah. And
all right, but we're seeing this now play out in places like Illinois. We've seen it in Detroit, where sooner or later this debt bomb explodes.
Yes.
And there's no running away from this, is there?
No, and it will. Some places are fortunate and don't have as large, but it is growing. And if you don't, start to manage it, now that you're measuring it, hopefully you will manage it. It will grow out of control, just like Illinois and Detroit and Chicago.
You looked at a lot of different governments in Colorado, including the state. Who's doing the best? Who's doing the worst? I mean, it's all bad, but on the level, is there any place that's doing it better than than others?
Yes, I can't remember them off the top of my head, honestly.
But you can find the report at
yeah,
truthandaccounting.org.
We did find that the school districts, as I say, were all doing poorly. But there were cities and some of the other little districts that seem to be doing fine. There are some districts that don't have pensions at all. So they're doing okay.
No, they're doing great,
yes,
right?
or they have, as you say, a 401k program.
So they're also being transparent by giving the money ahead of time. Right. Here's the pay, and here's your retirement money now, and everybody can see it, instead of saying, here's your pay, and later we're going to pay for your retirement. And these poor people think it's going to be there in the future.
Right, and the other difference, I was saying there's two differences between this defined contribution and defined benefit plan, where you pay the employee and you have that account for them. Well, they have to take the market risk. But if it's a defined contribution plan, which is what PARA is, the taxpayers take the market risk. So if there's a downturn in the market, the taxpayers are going to have to make up for that downturn in the market. Now you'll find a lot of people are like, oh, well, I'm staying away from the market. It's too scary. It goes up and down. Well, bad news, everybody. You're in it as a taxpayer because you're going to be responsible for the PARA's liability, which is fluctuating with the market.
Right. Got a minute and a half left here. Let me ask how this plays out, because I see one of maybe 2 or 3 options, and they all stink. Option number 1 is that the only way out of this is inflation. That with such an immense amount of, we're going to pay you $11 billion, well, we're going to inflate the money supply so big that $11 billion is really just $100 million in worth. I can see that. Or I see a point where, no, we need a real retirement, and the government has to either raise taxes massively or cut benefits massively. Do you see any other option there?
Or they could cut other places in the government.
They could cut education, they could cut prisons, they could do something to feed the retirees.
I tell people it's a simple thing. I know
it's a simple thing.
It doesn't.
It sucks, but it's simple.
You have a long-term cash shortfall. So you either need to bring more money in or take less money out, or a combination of the two. And you're going to have to, the pain is so bad, you're going to have to do all of them, at some level.
And here's the part people don't want to hear. This has to happen. It's going to happen either sooner, which will be less painful, or we'll keep pushing it off, and it's going to be really painful.
And also the thing is, you're talking about in the future, which a lot of people don't care about. The future, they only care about here and now. But what's going on is you can't hold your government officials accountable because you really don't know how much government costs because they're hiding the cost. So it's something that's happening right now.
Let me end it on this. If CEOs were hiding this in private corporations, they'd go to jail.
They would go to jail.
I'm going to say it again.
They would go to jail.
You think Enron was bad if the people in charge of private corporations did exactly what governments were doing, they would be in jail.
Right. And Enron was keeping off-balance sheet liabilities. The governments are keeping off-balance sheet liabilities.
And by comparison, what the government is doing makes Enron look like nothing.
Right, because they were a small corporation. This is everybody.
Sheila, thank you so much. Great report, and you can see it at truthhandaccounting.org. Stay tuned.